EcoBiz News 24. Welcome back to EcoBiz News 24. The Fed set to cut rates next week. What this means for the economy. Big news coming from the Federal Reserve. After months of speculation, the Fed is expected to cut interest rates next week, marking the end of the first phase of its easing cycle. So, what's behind this decision and how will it impact you, the economy and the stock market? 1. Why is the Fed cutting rates now? The decision to lower rates comes as inflation pressures have eased, and the economy has shown signs of slowing down. After a series of aggressive rate hikes in 2022 and 2023 to combat inflation, the Fed is now shifting gears. With inflation under control and economic growth moderating, a rate cut could help stimulate growth without overheating the economy. 2. What does this mean for you? For consumers, this means lower borrowing costs. Whether you're looking to finance a car, buy a home, or take out a personal loan, lower interest rates make it cheaper to borrow money. This could encourage spending and investment, giving a boost to sectors like housing, consumer goods, and big-ticket items. Rate cuts often provide a boost to the stock market, especially for growth stocks and tech companies that benefit from cheaper capital. Investors are likely to see rate cuts as a signal that the Fed is trying to support economic activity, which could be a positive sign for markets in the short term. That said, some market watchers are cautious, as too much easing too quickly could spark concerns about inflation creeping back up. What's next after the rate cut? Next week's cut is likely the first in a series of easing measures as the Fed looks to balance economic growth and price stability. Economists are keeping a close eye on how the Fed communicates its plans for future rate cuts and whether they signal further reductions in the coming months. What does this mean for the Fed's strategy? The Fed's decision marks a key turning point in its monetary policy. After aggressively hiking rates to combat inflation, this rate cut represents a shift toward a more balanced approach. The central bank will likely continue to monitor economic data closely, adjusting its strategy based on how inflation and growth evolve over time. Is the economy out of the woods? Not quite. While a rate cut is a positive sign, there are still risks, including global economic slowdowns and potential geopolitical uncertainties. However, the Fed's decision to ease suggests they believe the US economy is in a position to handle a bit more growth support without reigniting inflation. So, what do you think? Will the rate cut help jumpstart the economy, or could it spark new challenges? Let us know your thoughts in the comments below. Don't forget to like, share and subscribe to EcoBiz News 24 for more updates on the Fed's policy moves and how they could affect your finances.